Picking the wrong health insurance tier can cost you thousands, even if you picked a plan with a low monthly premium. In the next 12 minutes, we'll show you the 4 metal tiers, reveal the silver plan secret that can save you up to $5,000, and walk through real examples so you know exactly which tier fits your life. Welcome back to NextGen Money Trends, where we break down insurance and money fundamentals so they actually make sense for the next generation. In part 1, we covered the major policy changes for 2026 and explained the subsidy crisis that could double premiums for millions of people. If you haven't watched part 1, we recommend starting there. It sets up the context for why 2026 is different. In this video, we're answering the most important question. Which metal tier should you choose? Bronze, silver, gold, or platinum? We'll explain what each one actually means in real dollars, show you the powerful cost-sharing reductions that only work with silver plans, and walk through 4 real-life examples so you can see which tier matches your situation. Then in part 3, we'll show you exactly how to enroll step by step. Let's figure out which tier is right for you. Well, think of marketplace plans like a spectrum. All of them fall into 4 metal tiers: bronze, silver, gold, and platinum. The metal tells you how costs get split between you and the insurance company, and that split plays out in real dollars every time you need care. Bronze plans have the lowest monthly cost, but you pay more when you get sick. The insurance covers about 60%, you cover 40%. And that's after hitting a big deductible, usually $7,000 to $8,000 or more. If you're young, healthy, and rarely see a doctor, bronze can work. You're basically paying for catastrophic protection while saving money month to month. Now here's where it gets interesting: silver plans. Insurance covers 70%, you cover 30%. Monthly costs are moderate, and deductibles typically run between $4,000 and $6,500. But silver has a hidden superpower that the other tiers don't have. And this one stays no matter what happens with the subsidy legislation. If your income falls within a certain range, this tier can save you thousands. And we're going to show you exactly how in just a minute. But first, let's quickly cover gold and platinum so you understand all your options. Gold plans work well when you expect regular medical needs. Insurance covers 80%, you cover 20%. Monthly premiums are higher, but deductibles usually fall between $1,500 and $3,000. Your copays and coinsurance are lower and more predictable, which matters if you take medications regularly or see specialists. Platinum plans are the premium option. Insurance covers 90% of your costs. You'll pay the highest monthly premium, but deductibles are often under $1,000, and most services come with low, fixed copays. Not every area offers platinum plans, but if you need frequent care and hate surprises, they deliver peace of mind. Now let's reveal that silver plan secret we mentioned. This is guaranteed for 2026, regardless of any subsidy changes. For people earning under 250% of the federal poverty level, that's about $37,000 for a single person or $76,000 for a family of 4. Silver plans get what's called cost-sharing reductions. And this is huge. If you're at the lowest income levels, your deductible can drop all the way to around $500, and doctor visits might cost just $10. We're talking about a deductible that goes from $5,000 down to $500. That's a $4,500 difference. As your income goes up within that range, the help scales down, but it's still significant. And here's the kicker. This benefit only exists on silver plans, not bronze, not gold, not platinum, just silver. This is locked in by law and doesn't change with the subsidy debate, so even if your monthly premium goes up because subsidies aren't extended, if you qualify for cost-sharing reductions, silver is still your best bet because it dramatically lowers what you pay when you actually use your insurance. So you might be thinking, how do I know which tier is actually right for me? That's exactly what we're covering next. A low monthly premium looks great until you're sitting in a doctor's office trying to figure out if you can afford the $6,000 deductible. Smart comparison means looking at your total potential costs for the year, not just that monthly bill. Start by estimating how much care you'll actually use in 2026. Are you basically healthy and just need an annual checkup? Do you take a couple of prescriptions and see a specialist occasionally? Or do you have ongoing conditions that mean regular appointments and procedures? Your expected usage should drive which tier you choose. Healthcare.gov helps with this. The site shows you estimated total costs for low, medium, and high usage scenarios. Those numbers combine premiums, deductibles, co-pays, and coinsurance. It's the closest thing you'll get to seeing what you'll really pay over the year. And here's the important part. These estimates will reflect whatever subsidy law is in effect when you're shopping, so you'll see accurate numbers based on the current situation. Next, you'll want to dig into 3 critical details. First, confirm your doctors and hospitals are in-network. Check the plan's provider directory yourself. Don't trust that your doctor's office will know which plans they take. And here's a mistake that costs people thousands. Assuming your specialist is in-network just because your primary care doctor is. Always verify each provider separately. Second, look up your prescriptions in the plan's formulary. Generic drugs on Tier 1 are cheap. Brand name drugs on Tier 4 or 5, those can run hundreds per month. Third, verify the out-of-pocket maximum. For 2026, it can't exceed $10,600 for you individually or $21,200 for your family. That's your financial safety net. Last step, run the subsidy calculator with your exact projected 2026 income. And pay attention here because this is critical. A difference of just a few $1,000s can swing your subsidy by hundreds per month, especially if you're near the income thresholds for cost-sharing reductions. Be as accurate as you can. Now let's see how this works in real life. Let us introduce you to 4 people who each made different choices, and you'll see why each one was right for their situation. Keep in mind that their monthly premium amounts could vary depending on what subsidy law is in effect, but the logic for choosing their tier stays the same. Meet Jake, 28, healthy and active. He runs, bikes, and sees his doctor once a year. He picks bronze, pays the lowest monthly premium he can, and puts the difference into an HSA for emergencies. If something unexpected happens, broken bone, sudden illness, his cost cap at $10,600. Not fun, but manageable. And he's not wasting money on coverage he doesn't use. With enhanced subsidies, his premium might be $50 a month. Without them, it might be $120. Either way, bronze still makes sense for his situation. Then there's Maria, 45. She takes 2 brand name medications and sees a specialist every few months. Her income is around $35,000, which qualifies her for those cost-sharing reductions we mentioned earlier. She chooses silver, and suddenly her deductible drops to about $500 instead of several thousand. Her prescription co-pays fall dramatically. This is true regardless of the subsidy situation. Cost-sharing reductions are locked in. If she had picked bronze to save on the monthly premium, she would have spent an extra $3,000 out of pocket that year. That one choice made all the difference. Consider the Johnsons, a family of 4. Both kids have asthma, one's in braces, and one parent manages an expensive chronic condition. They go with gold. Yes, the monthly premium is higher, but hospital visits, routine care, and prescriptions cost far less than they would under bronze. Their budget stays predictable, which matters when you're managing a household. Whether subsidies are enhanced or not, the total cost calculation still favors gold for their usage level. Finally, there's Robert and Linda, both 62, dealing with multiple chronic conditions. They choose gold or platinum, predictable co-pays, minimal surprises, and they can focus on staying healthy instead of stressing about every medical bill. At their stage of life, that certainty is worth the higher premium, and they're close enough to Medicare eligibility that budgeting for 1 year of higher premiums is manageable. Each of these people made a different choice. Each choice was right for their situation. That's the point. The best plan matches your life, not someone else's. The subsidy amount affects how much you pay, but the strategy for which tier to choose stays the same. Now that you know which tier fits your situation, the next step is actually enrolling. In Part 3, we walk you through the exact enrollment process step by step. We'll show you the December 15th deadline you cannot miss, how to verify your doctors and prescriptions are covered, where to get free help if you need it, and how to avoid the mistakes that cost people thousands. Choosing your tier is half the battle. Enrolling correctly is what actually gets you covered. Here's your action step. Think about your expected healthcare usage for 2026. Are you more like Jake with minimal needs? Maria, who needs regular specialist care? The Johnsons managing multiple conditions? Or Robert and Linda prioritizing predictability? Once you know which tier fits your life, you're ready for part 3, where we show you exactly how to enroll. Remember, that silver plan secret we showed you? That alone could save you thousands, and it's guaranteed for 2026. Understanding which tier fits your situation is the foundation, but knowing how to enroll correctly is what locks in your coverage. If this helped, hit like and subscribe for more smart money moves. Drop a comment about which tier seems right for your situation and watch part 3 to learn how to actually enroll. Until next time, keep building that next-gen wealth.